So today is the final day. This is not day 4. We swapped the entries over for this one. The reason why is because when I first done this, I think I made it kind of a little bit difficult to understand. So I'll give you guys, obviously, the gist of what I'm trying to explain to you, and then you probably and hopefully will use the information that you've taken this week to combine all that knowledge and obviously apply it. It's going to be very simple, to be honest with you. When I looked over the video again, I realized that I made it a bit too difficult. So I hope you enjoy it. Today we're just going to be looking at buying higher lows and selling lower highs. Simply put, we're going to obviously be buying at the best possible opportunity and selling at the best possible opportunity. Regarding double tops and bottoms, I'll get into that as we go along. So just an overview, obviously, and yeah, before I start, guys, as I said, if you lot can just jump in and just help out so we can all obviously encourage each other. And when I ask a few questions, it's simple answers, okay? So just an overview. We know obviously when price is up, we're looking for buys. When price is down, we're looking for sells. And when price is consolidating or ranging, we could either be looking for buys or sells. So obviously that's simple maths. We understand that. The rules are, of course, going forward are very simple. Now, we don't want to make this complicated. If we don't recognize a pattern, then of course, we're not going to be trading, okay? Now, when I refer to the word pattern, of course, I mean market structure. So if the market structure is not in our favor, or it is in our favor, but a trading opportunity doesn't arise, then the best thing for us to do is not enter the trade. The reason for that is for our psyche, if we start entering trades that don't meet the criteria, okay, what will end up happening is our bodies will automatically lock onto the negativity, okay? And then once that happens, it will always discourage us or always make it harder for us to enter another trade, having full faith in the strategy that we're using. So you don't want to create a pattern for yourselves that end up becoming detrimental. So the best thing to do is try and be consistent. There's nothing worse than coming out of a trade and saying, I knew I should have never entered it. If you can enter a trade, of course, you're managing that trade with your risk, and you come out of it and you know that you took a trade based on a set, based on the market structure and a set criteria, then it's so much easier to obviously accept and move on, okay? Now, one thing that I have mentioned a lot as I've been teaching is if you're humming and hawing, then of course there's no trade, okay? So what I usually say is if a trade is a maybe, or if the trade is questionable, then you just don't take the trade. It just falls in line with not recognizing the pattern and fitting our criteria. So try and make it very simple for yourselves. Don't make it complicated. As I already told you guys during the week, the best patterns and market structure to take are the ones that we can identify very simply. So when you look at a chart and you see price action and then you see price come back to a level and it looks this simple and you say, I could have taken this trade, they're the kind of trades you really want to be waiting for when you're looking at your charts, okay? Now, one thing I'm going to start doing as well for the new year and for everybody here is really trying to hone in on specific charts, and of course try and tie it in with what's happening in the economy. Now, we're not going to do fundamental analysis, but what we can start to identify is when an economy is strong or when an economy is weak. If we can do that and apply it to the charts, then we can start getting in some big trends as well. And I think that's going to be very important to obviously making money in Forex and, you know, making trading easier, because we have to learn to accept our losses, okay? And the reason why we can learn to accept our losses is because we know that our wins are always going to trump eventually when we get into a good trade. So we're going to try and practice that art as of next year. I think we've learned a lot so far since we've been around. So let's try and hone in on this and then move on. So looking at this, I mean, it's a new day, so let's just do this very quickly. These are buying opportunities, and of course, these are selling opportunities. So if we just look at the buying opportunities, if you guys can just shout them out, what do we see in this pattern here? Very simple. We know it's a buying opportunity. What buying opportunity is this?
Uptrend.
Yeah, it's an uptrend, of course. This is a what? What pattern is this? What market structure are we looking at?
Higher highs, higher lows.
Higher low.
Yeah, so break and retest. Very good. What's this pattern here?
Double bottom.
What does a double bottom indicate to us? A potential
Reversal.
Very good. Here we have another obviously buying opportunity, but what are we looking for price to do?
Touch the trend line.
Very good. And when do we take a trend line retest trade? Very simple, guys. When do we take a trend line retest trade?
When it breaks.
Reach the retest.
When it touches a trend line, okay? Or when it breaks the structure highs, okay? It's entirely up to you. What do we have here?
Range.
Consolidation.
Yeah, consolidation. So we can look for buys and sells. Of course, we wait for a break and a retest or a last kiss. What do we have here? Can you see that, guys?
Bottom.
What?
Miss double top.
Miss double bottom.
Miss double
Yeah.
bottom. Very good. Yeah. Can you see it clearly? Because for some reason on my PC it's covered, but can you see it clearly on your side?
Nope.
No, really.
Not really.
No.
You're missing it as well. All right.
Yes.
I recognise it from last week though, so I think
Sure. Let me just let me clear this a second.
there we go. We can see it now. Oh, I
Oh,
can.
perfect. Yeah, oh, bollocks. All right, forget it. Okay, and then what do we have here?
Break of trend
Break
line.
of trend line and reversal.
Very good. So it's a break of trend line. It's a retest for a potential reversal. Very good. And then we'll just fly through this one. So we have a trend down. This is break and retest, simple. This is a double top indicating a potential reversal. This is a trend line retest. So of course we just wait for the price to come back to the trend line for a retest or break of structure lows. Here we have a break of a trend line and a retest for reversal. Here we have a range of market. We look for breakouts to the upside or to the downside. And then we have a missed double top, which indicates price, of course, is stepping down and potential reversal to the downside, okay? So we've got this. Maybe you guys can print this off. It's in the drive and just use it to identify. What I want you guys to do as well is we understand all of these market structures. This does not mean we're ever going to get into, or all the time, should I say, get into a perfect opportunity that looks like these. But what we're trying to do, okay, is really use the knowledge that we have now to combine everything together and help us break down the market structure and then figure out a potential trade and opportunity. So don't you look at this and say this is 100%. Obviously, just use what you know about these kind of formations and market structure and then try and apply it to your charts, okay? So what's the criteria? Okay, so of course, we've mentioned that 4 hour is going to be the key to us breaking down our charts, okay? Your daily time frame you can use, but you're only going to be using these for the last few days worth of movement, okay? Now, what we want to see, of course, is strong movement in the market, which indicates or lines up with what we're seeing on the 4 hour chart. So if the daily chart is showing two strong bullish candles, no, let's use bearish candles in this instance, and we go to the 4 hour chart and we break it down, and we see prices stepping down and prices potentially coming back to a strong resistance or looking to break a support level, then we can combine those two pieces of information and confirm that on that day we are potentially looking for sales. If you start to see the market showing indecision, then what you have to identify is that price has probably not found a direction. So what you'll do in that instance is find your bias on the 4 hour time frame and try to figure out whether you're going to be looking for confirmed sells or confirmed buys. If it's not clear, then of course you can start to ask yourself, is the market ranging or consolidating? Am I looking for either buyers or sells? Okay, so it's very simple. So, you know, I wouldn't refer to the daily too much because it can become a bit confusing in terms of what we're doing with this strategy. But if you want to, then you can use the last 2 days worth of candles to help find confluence with the 4 hour time frame. Now, we also know clearly that the 4 hour is going to be used to identify your key levels and structures of the market. I really, really recommend you don't digress from this, okay? The 4 hour time frame is very powerful because it gives us a lot of information and at the same time, it's still not too noisy. I find that we get our clearest market structure from the 4 hour as opposed to daily. So I would really stick to it, okay? And with the 4 hour time frame, what's very good as well, if you're working, you have family, you haven't got time to trade all the time, you are simply just waiting for your 4 hour candles to close at key levels to potentially look for trade. So if you're working, you know, a normal 9 to 5, then maybe that's 8 hours worth of work. You know, during that day, you only really need to be checking your charts twice, unless the market is really pushing, which rarely happens. unless there's news. So it can really fit into what you're doing. Your 1 hour time frame, guys, will be used to monitor price approaching your key levels, okay? Now, remember, we broke it down. In the 4 hour candle, we have 4 1 hour candles. So we're looking for at least 2 hours worth of confirmation of rejection for a potential continuation or reversal. So use your 1 hour time frame, obviously, to monitor your charts. It's a good time frame to monitor, again, also because there's not so much noise. Your 30-minute and 50-minute time frame will be used to identify first signs of rejection. Now, I should not have put 15 minutes in here, to be honest with you. I should have removed it before I started. Forget about your 15-minute time frame. It's not important. There's too much noise. And unless you're really marking up your charts the way, obviously, I've been teaching and really having faith in your 4 hour time frame, the 15-minute will confuse you. So just stick to your 30-minute, again, along with your 1 hour to identify first signs of rejection, okay? Now, you must always wait for 1 4 hour candle close or at least 1 hour candle close. So what I mean by that, if price comes back to a new level, you want at least a 4 hour candle close. And once that level has confirmed as a potential resistance or support zone, you then can wait for at least 1 hour candle close, but only after price has confirmed it. With a 4 hour candle, okay? Your entry time frame is any time frame as long as you can find a stop loss. Now, you guys would have obviously either watched the video or been on the webinar when we spoke about entries. We don't care what candles are doing, what they look like. All we're waiting to do all we're waiting to do is wait for price to find momentum and trigger us into the trade, or at least move in the direction we want to enter the trade. Of course, that's with momentum. And if we can enter the trade, the only way we're going to survive as traders is if we've got a good stop loss. Set it in your trading plans, whatever you want it to be, whether it be 10 pips, 15 pips, 20 pips, 30 pips, 100 pips, I don't care. As long as you set it in your trading plan to only use 10, 15, 20, 30 pips worth of stop loss. If it's 1 pip over or 2 pips over and it's not a safe trade, then do not enter the trade. Okay. Now, taking into account news for the day on your trade is important. We have a group channel in the Slack community for news alerts. So anybody that's got knowledge of news and we haven't put it out there already, then let everybody know. We really want to avoid taking trades near to news. And of course, if we are in trades when news is about approaching, we want to secure our trades, okay? And of course, you want to consider the time of day you're looking to take trades. Now, I said to you guys that I don't trade London Open simply because I've had, bad history in the past. And with regards to, my experiences, I find that there's a lot of hype in the morning. The markets can whipsaw a lot and price can fluctuate in unexplained ways, okay? So I prefer to wait till about 9:30, 10-ish once the markets calm down and the storm has settled. And then, of course, I'll trade up to about 2 o'clock. So I'm looking to trade about 4 hours a day. January, I'm going to switch it up a little bit. I'm going to try not to be spending too much time on my charts. What I want to be doing is setting my alerts and waiting for my price to come to my levels. Because, of course, if you fixate on your charts, you're inclined to want to trade. And when you're inclined to want to trade, you end up taking trades that don't fit your criteria. So, of course, time of day is important. London Open, if you trade that, fine. I suggest letting it settle, but that's down to you. Of course, half an hour before New York Open is a good time to look for trades as well, because you have momentum being pushed into the market. And then, of course, around 4 o'clock GMT time, I'd look to start pulling away from the chart, simply because London's closing. And of course, there's going to be less volume. But you guys will figure it out for yourselves and fit it into, obviously, your lifestyle and routine. Now, things to remember, okay? Everybody sees things differently. So going forward, when we post our charts in the group, let's keep an open mind. Just because somebody says it's a sell and you think it's a buy, it doesn't mean that you're wrong. It doesn't mean that they're wrong. It just means we're seeing things differently, okay? So what you want to do, even though we're all learning the same strategy, or we may be adapting it in our own way, stick with your bias. If you believe your bias is sells, take sells. If you believe it's buys, take buys, okay? Nobody should be asking in the group, should I take a sell, should I take a buy? It is personal. And I do believe as you grow as traders, you will learn to accept that, because you don't really want to become reliant on anybody. And that's why I don't offer signals, because then if I offer signals to you every day and you were taking 3-4 wins a week and then I got knocked down by a bus tomorrow, then you won't have me there to help you, okay? So learn to trust in yourself, trust in your analysis, And of course, once you practice that, then you become more confident in what you're doing. You must digest information in the best way that you understand it. So everything you've learned this week, guys, okay, I don't want you to take it word for word. I don't want you to write everything down I've said. What I want you to do is digest that information, dissect it, and then apply it in how you understand it. Everybody will have a similar but different strategy, which is very unique. And that's what makes us obviously different as traders, and hence the reason why there's so much price movement in the charts, because if there wasn't that fluctuation, then we wouldn't be able to make money, okay? The price action that happens on the charts is just everybody's emotions until the banks get in and wipe us out, okay? So just because someone sees sales, it doesn't mean you can't buy, vice versa. Patterns will be interpreted in different ways. So how you break down your charts, of course, just going over what I just said. Most important thing, guys, is that you stay consistent, you stay disciplined, you just constantly repeat your process. Once you guys finish this this session with me today, you can go on to the bonus video. I'll show you how to break down your account size into manageable trading opportunities that will really, really help you not be affected with emotions and psychology. Okay, it will really change the way you see your account, and I do recommend you watch that when and if you can. Okay, practice will never make perfect, and that's a belief you guys have to learn to accept. It doesn't matter how good you are as traders. You know, you'll never have a 100% win rate, and if you do, then obviously it's a good run of luck. Now, the thing is, okay, in trading, our ultimate aim is to secure our account balance, okay, so that when we get into good trades, we make money. Not when we get into good trades, we make back the money we've lost, okay? So it's important to learn to accept small losses and try to really maximize our winnings. That goes without saying, and I'm sure everybody knows it. And as I said, keep it stupid simple, okay? So buying higher lows, of course, we want to make sure we're in a buying market, okay? Use your criteria and patterns to identify this. A higher low will not always be a perfect scenario. We've already gone over this. If price is in a buying market and does not break 4-hour structure lows, then of course you're going to be waiting for a retest, and you want to use your rejection candles as your signals, okay? Now, I mentioned potential signals. I mentioned it this morning to a member in the group. I want you guys to approach your trading as potential. Anytime you're talking, I want you to use that word. This may be a potential reversal. This may be a potential continuation, okay? And this may be a potential break and retest, because what that will do for you is that will help you to be flexible, okay, in your trading. If you say this is going to retest, the excitement of wanting to trade, period, is hard enough to control. Just having money in your account causes too much excitement. And when you have money in your account, you of course want to trade. So you have to really try and hone that in, okay? You don't want to look at a chart at 9 o'clock in the morning and say, this is a retest level, and then have to sit at your charts for 3-4 hours waiting for price to come there. And because you have anticipated the retest, you enter a trade and then it breaks. Now, of course, combining everything together is going to cause serious frustration. So if you just keep it as potential opportunities, then what you can do is you can mark that level, go away and continue to look for other trading opportunities. Come back to it as a potential, not as a cert, okay? And once you learn to do that and really ingrain that in your head, it will really help you with your trading and your psychology, okay? But as you guys know, we enter when we have a valid stop loss and, of course, a valid risk-to-reward ratio. I spoke to you about this quite a bit this week. We always want to make sure that our reward is much greater than our potential loss, okay? Because this is what's going to help us build our accounts. Now, going over major and minor, this should be your thought process, okay? If we've anticipated the structure of the market, so whether that be buy or sells, and we've identified our potential market structure, not pattern, we now know that we can buy high low and sell a lower high, okay? So this is what I want you guys to start to practice once you've mastered everything else. What's stopping us taking trades in the opposite direction to our bias? Okay? Now, I want you to think about that question. What is actually stopping us taking trades in the opposite direction to our bias? Well, we're going to go over this now in a little bit more details. We know our structures, we know our criterias, and we know the potential signs for entering trades, okay? Which is rejection candles or strong engulfing candles coming to a strong support or resistance level and not being able to break it. Okay, so think about this question. If we've anticipated the structure of the market, so we know where the market's going, we've identified our potential pattern, we know we can buy higher lows and sell lower highs, is there anything stopping us taking trades in the opposite direction? Does anybody have any thoughts on that? I know you've been taught all this week to buy in a buying market and sell in a selling market, but does anybody have any thoughts on? Yeah,
I think on my thought on this, I think that it depends on your level.
yes, exactly.
Yeah.
Very good point. And that's what I'm going to illustrate. It is very dependent on your level. So this is why I've left this to last. And the feedback that I got was this should come last, okay? Because you guys have basically learned the strategy already. Now you can go away and apply it, right? Once you've mastered that, I want to make this clear, and you're confident in what you're doing, then you can. But I do want to drop this to you guys because I think it's very important as well in helping you with your bias, okay, of either taking buys or sells. So let's just have a look at an example here, okay? With this market structure, what do we see, guys? What do we see?
Down movement.
So at this moment in time, we see a downward movement in this market.
Yeah.
Looking to the left, we had a strong trend to the upside, okay? So let's just break this down, right? If we're looking to take trading opportunities, and I want you guys to practice this on your charts as well. Somebody mentioned simulator in the group, and Dan, known as Picasso in the group, and myself had a little laugh about it because the simulator is very good for practicing, and I think more so for breakout trades, okay, because it happens more often. With regards to break and retest, we don't really expect to get into a break and retest on any one pair 5 times a week. So using simulator is very difficult if you don't obviously patiently wait for those setups to come. So I personally would advise you guys to back test in this way, okay? Now, if we look at this market, we know the price was in a strong uptrend, okay? Once price breaks this trend line, we're simply looking for price to come back for what?
Retest.
Retest.
And once price comes back for a retest, what does this indicate to us?
It tells us that the trend is reversing.
Potentially reversing, okay? Potentially reversing, right? So now, of course, price is pushed down. Now, at this moment in time, we do not know that price is reversed at the moment. We only have an identifying mark that price is potentially reversing because of the trend line being broken. So now we're expecting price to pull back and then to find some sort of resistance and then continue to the downside. Now, what I want you guys to be clear of, okay, is that when price starts to do this without a pullback, it's best just to wait. I wouldn't start doing things like this, okay? Because I'll be very honest with you. If you start doing this, then what's going to happen is you're going to find resistance everywhere on the chart because you're forcing a trade. The best bet is just to wait for price to tell us what's happening, okay? So now, not to confuse things, right? We know we take sales in a sell bias market. Looking at this structure and this pullback, this is a 4-hour candle, okay? Now, this is indicated to us what?
Rejection.
Yeah, so bulls tried to push the market up and failed. This is a strong 4-hour rejection candle, okay? I don't care if it's green or purple or blue, whatever it is, it's a rejection, okay? Now, what we can see, this is a 4-hour candle also. Price has tried to push up again, and we started to reject. Now, the ideal scenario, okay, and obviously it's what's painted on Instagram a lot, is to be able to get into trades at these levels and these levels, right? This is where people want to get into the trades. But once you start to identify price rejecting and then price attempting to push up again and rejecting, do you think that we can take a sell opportunity here, even though we haven't managed to take a trade at the top?
Yeah.
How would we enter this trade?
We'd actually have to go to the lower time frames to actually tell us what the wicks are saying.
Yeah.
Yeah, that's very true. But let's just stick to the 4-hour for 1 second, okay? So we're looking at this 4-hour candle, right? We're patiently waiting for this candle to close. Now, once price comes back to this level, okay? No. I said I don't want to confuse it. So let's keep to what I'm talking about. This is our first sign of rejection, okay? This is 4 hours. So we know price is rejecting this price area, okay? it's now starting to fall in line with the fact that the trend line has been broken. So this is a potential reversal. Now, once we drop down to the hourly time frame, we can see price starts to push up and then fail. Okay, it starts to push down just from the wick alone at this moment in time. Now, if we go to the lower time frames, even if we don't have perfect structure that tells us we can enter here, okay, this is still classed as a retest now, right? Based on everything combined. Looking at the 4-hour time frame, if price is in and around this area, how could we enter this trade?
I'm not sure.
This is your structure low, right?
Yeah.
How could we enter this trade?
A close below that.
A close below or
A break below. Yeah.
Break below.
or break below, exactly. And now this is where you guys really need to try and use, you know, the knowledge that you have. Even though we don't have a perfect break and retest structure here, we're now combining the fact that price has broken the trend line, it's failed to push up, and now, of course, this is our support level. So we can look for price to potentially break this level with momentum and push down, okay? Now, the way you do this, of course, is you have to identify your support zone. And as somebody said, you will find this on your lower time frames. And if you have a manageable stop loss, then you're able to get into the trade, okay? If you're able to do that, then of course you will get in these big moves, because remember, everybody at this moment in time is probably looking for sales or probably looking for buys at this opportunity. You have to try and think one step ahead, because if we're all thinking in the same way, then we're never going to make money in the market, okay? Because it just won't work. The money flow just won't work. So just breaking that down, this is of course a little bit more advanced, but it's very important to identify, okay? On the hourly time frame or 30-minute time frame, you'll start to see rejection candles. And once you see that, you can start to look to enter the momentum with the market. Now, of course, now we have this structure level, okay? Price has not come back to this level. Because price has not come back to this level, does this mean that we can't take a sell? We're now confirmed that we're in a sell bias market. Just because price hasn't come back to this level, does this mean that we can't take a sell?
No.
No. So what we can see, of course, after every push in the market, price has to exhaust, okay? So we see price exhausting here. Price is now moving up. These are 4-hour candles. We're now starting to see price reject these levels. This is a sign to us that price is going to potentially do what?
Push down.
And that's a continuation of this structure, right?
Yeah.
Which is down. How do we enter this market?
We'd wait for the trend line break and look for a potential sign of downward push.
Okay, so again, just to confuse you guys just a tiny bit more, but of course, the more you watch this, the more you'll understand. Again, price has not come back to this resistance level. But what can we see? This is 4, 8, 12. And I mean, this is not the greatest example. Let's draw a candle here. Okay, let's pretend this is a red candle. Okay, so now we have 4, 8, 12, 16 hours worth of rejection. Once we see price starting to reject these levels, even if we don't get in at the top, we can potentially start to gather that price is going to continue to push down. In that instance, do you think we can take a trade once price breaks these structure lows?
Yeah.
Right. Are you guys getting the point? Price has already made its own pullback and retested its own level.
Okay.
If we don't get in at the top, then all we're looking for is for price to show momentum and continue to push down. Okay.
Yeah.
Now, as I said, I've watched this video about once and I've done my best to explain it. Again, I'm doing my best to explain it, so I think I'm getting better. But of course, the more you watch this, guys, you'll have questions for me and then I can refine it. But I hope you're starting to understand what I'm trying to say, okay? So you're never, or more often than not, you're not going to have a perfect scenario. But once you start to piece the puzzle together, price was in an uptrend, it pushed down, it hasn't made its pullback yet, but here's its pullback. No, this is not a retest level, but this is its exhaustion because of the wicks. Now we can see price try to push up again. This is our structure low. Now we can identify this as a retest level, okay? And all we're waiting for do is for price to push down. In this instance, we'll be looking at our charts and saying we want price to come back to this level and then continue to push to the downside, okay? in this instance, it's not a perfect scenario. Price did not do that. But we can see 4, 8, 12, 16 hours worth of price trying to push up, okay? And now it's created its own form of resistance. We can see price was stepping up with this market, okay? So all we're simply waiting for is for momentum to shift and push down. This is now classed as our retest, okay? And this is how you start to build on your structure, okay? Until price starts to, you know, obviously do these sorts of things. Now, with this instance here, again, as an example, you would look at it and you say to yourself, price is rejecting, is pushed up. Now, of course, this looks like a perfect retest level. It didn't happen, but what this is a sign of potentially to us is price has already made its exhaustion. So now it's looking for its new wave of pushes. And then you can look to get into a sell opportunity once price starts to push down, as long as you have a good stop loss. Does this make sense?
Yes. Can I ask you a question, Brooks?
Yes.
I just want to take you back just for a step back before what you explained now, where we had the 16 hours of rejection, right?
Mm-hmm.
So you mentioned that we could actually take the trade at two areas. One, when we break the trend line in a form of momentum.
Yeah.
Two, was actually at the rejection candles there on the 16 hours. Can you please just go a bit further as to how would you have entered it there, that 16 hours worth of rejection?
Well, have you seen the entries video yet?
Yes, I have.
Yeah. So what you'll be doing, what you'll be doing is simply waiting for price to come into your stop loss range.
Okay.
And then you'll have obviously your reward. You wait for price to come back into your stop loss range. You set your sell stop and you wait for price to shift in momentum and push down.
All right. No problemo.
Okay. Let's have a look at example number 2. Okay. Why did I bring so much information to the charts? All right. So look at this chart for me a second, okay? So we can see price is pushing up, right?
Yeah.
Yep.
We can see we have the break of the trend line. So now we're looking for potential what?
Retest.
A retest. Okay. Now, we see price came back for a retest here initially, okay? And this is a 4-hour chart, so if you got in a trade, you may have taken some nice pips. We now can identify this as a potential what?
Resistance.
A resistance
Double top.
level, okay? A double top. Now, I mean, there's a lot of information on, we know, with this price action here, but what we can start to see, right, is price is now failing to break to the upside, okay? Now, there's 2 ways we can enter this market, right? We can enter the market immediately here. No, before I point out, actually, what I wanted to identify to you guys, okay, just for a second, is we now know price is, of course, in this formation, stepping up. Now, can I ask you something, right? Does this change our bias at the moment in terms of potential reversal? So we're looking for sells. Just because price is stepping up here, does this change our bias?
No.
What are we looking for price to do to change our bias from potential?
Pick out the major high.
Okay, very good. Good. So this is why it's important to obviously pick your bias, okay? So now we can see price is starting to hold at this level. Now, there's 2 ways to enter this market, okay? The first one, of course, is to wait for price to come to this level, and then obviously we'll set our sell stop. Can I ask, is this classed as a retest level?
Yes.
Yeah.
Is it a perfect scenario of what you've been learning?
Yeah.
Yes.
And
In one case.
in some cases, yeah. And in some cases, no. But what are we starting to identify very simply? Price is failing to do what?
To break the high on the left.
Exactly. So you can now look for sell opportunities here because price is telling us, of course, it's failing to break the high and it's forming a new resistance, okay? Now, this goes along with our trend up, break of the trend line, and now price failing to break structure highs, right? So now we're clear on that. Now, looking at this market structure again, we can see price is starting to form its resistance. So if you miss this trading opportunity, okay, at this level, can I ask, we now have a structure level of what here?
A low.
Low.
It's a low, but it's
Support.
Thank you. So can we take a trade based on the break here?
Yes.
Yeah.
Okay. Why? Because we've combined everything that we know together. This is our retest, maybe not picture perfect, but what we do know is price is starting to reject this level. So all we're looking for is shifting momentum to the downside. This is why it's important to pick your times wisely when you're trading, because this kind of thing happens for London Open, but I still find it very unsafe to trade. I recommend, if you're looking to take breakouts of this fashion or continuations or, you know, failures to break structure highs, do it at New York Open, because the markets usually push beautifully in this way and you get some really nice big candles, okay? But of course, you just want to make sure that you have a good stop loss. So you're going to be using your lower time frames to enter that. Now we're in a sell bias market, okay? Even though we haven't broken any structure lows, we have now, let me clear this, we are now starting to do what? We've broken the trend line. We've now failed to make a double top, and price is now starting to do what?
Step down.
Very good. Now, if we fail to take a trade at this retest level, because we may not be awake what happened during Asia, we now have missed a breakout because for whatever reason, what are we waiting for?
Retest.
The retest. Okay. So now we have our retest level. This is obviously, of course, a picture perfect retest, okay? If you fail to take a trade here, is there anything wrong with taking a trade at a break of this level?
No.
No.
No. And once you guys start to, of course, you know, master this strategy, you'll start to identify your charts. That was really unclean. Right, sorry about that. And you'll start to identify your charts like this, okay? And once you're able to do this, you can really, really look for great trading opportunities. Can you see this?
Yeah.
Our price holds between zones, okay? And it happens a lot. But the only time you're going to be looking to take sells is when?
On retest.
No, very simple answer. You're only looking to take sells when you're in what?
Momentum.
Downtrend.
Down momentum.
Yeah, bearish momentum.
When you're in a sell bias market, the break of this trend line, the failure to break structure highs, and now price shifting down, within these structures, are you looking to take buys?
Oh.
No.
No.
Because we're in a sell bias market. And this is where you can really, really get into some fantastic trades, okay? Now, notice what I'm doing here. We're not finding perfect retests, but we're trying to put the information we have together, okay, to help us identify potential trading opportunities. Now, this is where it might confuse you a tiny bit, okay? We know price is pushing down, so we're in a sell bias market, right? When we start to see price failing to break structure lows, when we see price failing to break structure lows and given a strong size of failure to break structure lows, okay, and start seeing rejections, do you think we could take a buy?
No.
Okay, this is where it's going to baffle you a bit, okay? We know after every push, price must do what?
Exhaust.
Yeah. What is this here?
Just a
Exhaust.
pullback.
It's an exhaustion, right?
Yeah.
This is a strong push at this moment in time. Does everybody agree?
Yes.
Yes.
So the answer to the question is yes. If you're comfortable to do so, you can take buys at this level. But you need confirmation. And you need to build on everything that you know about the market. We have a huge push to the downside with no exhaustion. Price is now attempting to break the structure and formed a new structure support. If you're able to get into an opportunity, you can take a buy at this level, okay, if you want. Okay, I know it goes against everything I've told you, but we know that price has to exhaust. Now, how can this help you in your trading? Well, if you see price pushing down, okay, you have to anticipate price will do what? Exhaust, okay? If you start to see price forming wicks, even if you don't take a buy, you can anticipate price is potentially going to do what? Pull back before what?
Continuing.
Very good. Okay. So now we see prices pull back, okay? And now, of course, it's forming a new structure resistance. We don't know this is, of course, going to be our resistance level 100%. It's not as clear as some of the others, but we do start to see signs of rejection. Now, we want to enter the market when there's momentum, okay? Now, do you think that during this range, you can start looking for sell opportunities?
Yeah.
Yes.
Yeah, if there was a clear sign. Now that we know price is continuing to push down, right? We're now waiting for price to come back to a resistance level. Everybody agree on this?
Yes.
Yeah.
Okay. Now, we're never going to have a perfect scenario. We can notice here that price never came back to this level. Okay. But what can we start to see? Price is starting to do what now?
It's rejecting.
Rejecting again. We're still in a sell bias market. So what we can start to look to do is look for price to break structure lows if we're not able to get in here. Do you think we could take a sell at this level?
Yeah.
Yes.
Yes. Okay. Are you gathering the picture that I'm trying to paint here?
Yeah.
Yes.
Yeah. Okay. Now, it's very easy to do it when obviously the price actions happened. But before anybody calls me out on that, if it's easy to see after the price actions happened and we can identify it often, do you not think that if we continuously repeat our process, eventually we're going to have runs of great trades with big wins and eventually have a run of small losses and then, wins, losses, wins, if we just repeat what we know? And this is the importance, of course, of making sure that we don't revenge trade or have our stop loss too big, because all we're waiting to happen is for what? These trading opportunities to arise. Do we know they're going to happen? No. But as long as we keep repeating what we're doing, guess what? We will get into great trades with great rewards, okay? And I gave you this example at the start of the week. Institutional bankers and the big boys, this is how their trading looks, okay? They'll have small losses, and then big wins. Small losses, and then big wins. They have more losses than they'll have wins. And believe it or not, do your research. They trade around 50-55% win rate. And of course, most hedge funds, they're happy with at least 60% a year. Why? Because they're trading with big balances. That's understandable. But also, they know the power of really, really maximizing your wins. Okay. I'm not saying that you're going to lose like this every day. Retail traders is a bit more simpler for us because we don't have that much pressure. So we can pick and choose to enter in the middle of the market or at breakouts, whereas institutional traders really need to be at the highest and lowest points to get the maximum, okay? But the point is we want to minimize our losses, take them, enjoy them, and then when we have our wins, maximize them. Does this make sense?
Yeah.
Yeah.
So in example number 3, we're looking at price action as it is, okay? Now, what we can see here in this example is price was pushing up, right? Price is now broken down to the downside. What are we looking for? What are we trying to identify here, sorry? What is this identifying to us? Forget about what you can see here. Trend line up, break of trend line. We're looking for a potential
Retest and potential change of trend.
Yeah, reversal. That's the point, okay? So now we have this as a what?
Double top.
Okay. We have this as our structure low. We can see price starting to push down, okay? Now, what do you identify with what's happening here with price action? I showed you one of the...
We see the price stepping up.
Okay, before we see price stepping up, right? So let's build on this, right? Price broke the trend line. It's come back for a double top, which is beautiful and exactly what we want to see. We probably would have got in this trade and made some good money. Now, if we're holding the trade and we're in a sell bias market at the moment, and then we see price pushing down, okay, and then of course starting to reject, at this moment in time, it's starting to push up, okay? Does this mean we're in a buy bias market?
Not yet.
No.
No.
We are now waiting for price to do what? 2 things.
To break the
Stick
structure.
on the high and then retest.
Yeah. And if we're going to continue in a sell bias market, what are we waiting for?
To break
Break the
the
lows.
Break the low and retest.
Yeah. Okay. So now the point I'm trying to illustrate here is as much as we're starting to identify a potential sell bias market, we have to just use our wits about us, okay? even though this is a beautiful double top, if we fail to do that, we don't want to start getting trigger happy, okay, and thinking we can enter trades to run a sell bias market. What we have to do is wait for price to confirm to us. At this moment in time, from this point on here, we're sell bias. But once price starts to push back, we're either waiting for price to come and retest this level again. If it doesn't, then we'll wait for price to break this level for a retest, or for a continuation to the downside, look to break this level and continue down, okay? So the point is, even though price looks like the patterns and structures we're learning, we still have to keep an open mind, okay? Right, so I'm not gonna go into too much detail as we did with the other ones. We'll leave that one there. I want you guys to understand one thing, okay? When you're looking for sales, when you're looking for sales in the market, you of course want to make sure that you're in a selling market, okay? Now, if you're confident enough with what you've learned and the strategy I've been teaching you, and you want to take buys, that's entirely up to you. I do it because, of course, you know, I'm not saying that I'm right 100% of the time, but I kind of understand that if price is pushed, it can exhaust, and I know there needs to be an exhaustion before a push, okay? That's how I reason. So if I start to see good signs of rejection, then I can get into trades. It's up to you if you do it. But of course, make sure you're looking for sales only in the selling market. Use the criteria and patterns to identify this, okay? Now, as we've learned just now, not everything is going to be 100%, but learn to try and piece the puzzles together. If things don't make sense and you're in a sell bias market, do you think you should take sells? I'll say it again. If you're in a sell bias market, but things don't make sense to you, do you think you should still take sells?
No.
No, very good. Doesn't matter if you're right because it was a sell and you walk away and say, oh, I knew it was going to be a sell, I could have taken it. If it doesn't make sense to you, learn to have some self-control and walk away. Because at the start I mentioned you don't want to enter a trade where you're going to regret at the end. Because if you did enter that trade, guess what? You probably could have lost it. So always be clear on how you're going to enter the market and why you're entering it, okay? And as we just learned there, guys, a lower high or whatever, man, a sell or a buy opportunity will not always be a perfect scenario, okay? So it's important to obviously find confidence in what you're doing and bring everything together, understand why you're taking the trade, and then look to enter the market, okay? If price is in the selling market and does not break a 4-hour structure level low, now, we don't really want to be looking for extreme breakouts. We really want retests because that's what confirms, okay? So this doesn't make sense, to be honest with you, but I've put it there. Now, where you know that we're using our 4-hour structures, okay? And of course, you know, I've just showed you how to look for trades, you know, if we haven't had a perfect retest. But the best thing to do is wait for price. If you're confused, of course, to break either structure highs on the 4-hour, structure lows on the 4-hour, and then for a retest to confirm price is continuing down. Because we know after every push, we're going to have an exhaustion or we're going to have price moving in a sideways market, okay? Of course, just wait for a retest. That's very important. And use your rejection candles as your signals or potential signals, okay? Remember to enter with a value stop loss, guys, and a perfect risk reward ratio. Now, I'm not going to go over any more examples, to be honest with you, unless you guys don't understand what I'm trying to say. Do you guys have any clear indication of what I'm trying to illustrate here, or are you still a bit confused? In terms of, yeah, carry on.
Well, in terms of what you're teaching us is, I understand what you're teaching us. It's just a matter of, let's say, me actually sitting down in front of previous charts or market setups and actually piecing or learning how to piece things together. In terms of us sitting down on the 4-hour, actually identifying where we're at, how to read, I think you're doing a perfect thing. It's just a matter of us just going to sit down, actually piecing it together, learn how to go through the process ourselves. That's my point of view.
Okay, fine. So what I'm going to do for you guys, okay, is on Sundays, I'm going to go over the charts, even though I post them in the group. And I think what's going to help everybody here, even though I'm not, you know, right 100% of the time, and I don't want you to ever think that that's going to be the case, okay? But I think if you guys can start to hear my mind, my mindset and my thought process, based on what I'm teaching, I think it'll really help you guys to pull everything together. So in this example then, what I'll do, I'll go through these last 3 examples. We've got maybe, you know, 5 to 10 minutes. And Actually, you know what? Let me just see what I've got here. Okay, so let me just do this quickly, and then what I'll do, I'll jump onto the charts for you guys. I might as well do it very quickly, okay? So note here, okay, in any structure of the market, okay, you guys have to learn to accept this. Price can do three things, okay? And this is why I say keep an open mind. Price can come back for a retest. It can break a retest level, or it can fail to retest. Does that make sense?
Yeah.
Yes.
Okay. Nothing set in stone or foolproof, okay? So the expectation for a retest should never be an expectation. It should always be a potential, okay? Start to practice that, guys, and you'll avoid jumping in bad trades. Now, what's the secret? Well, price will more often than not come back for a retest to its major levels. This is very, very, very powerful, okay? If you guys can start to visualize that price has to come back to a level, and the reason for it having to come back to a level is because of liquidity, okay? Price cannot push without having enough orders. If you can start to understand that, okay, and really ingrain it in your head, then you guys will patiently wait for trading opportunities. This is why you'll hear so many people, and you will see it so many times on the charts, that price more often than not, whether it's a major double top or a major double bottom, will always come back to a level, okay? And once price comes back to a level, it will collect liquidity. Whether it breaks and cause you to be stopped out, or has fake outs, whatever it may be, it will come back to a level before it continues, okay? And if you can start to visualize, say now you're in a sell bias market, okay? Let me do this a second as an annotation for you, okay? Say you're in a sell bias market, okay? And this is your support level. Price now finds support at this level and continues to push up. Now that you obviously have broken the trend line, you're now potentially looking for price to do what? Retest the level, okay? Now, if price doesn't come back to this level, okay, we now know that price, of course, can either do one or two things. It can continue to push up or down. Now, for buys, to confirm buys, we really want to see price breaking its 4-hour structure levels for a retest, okay? Now, if you start to see price failing to break these levels and pushing down, price always has to come back to a strong level for liquidity. What could you guys start to identify potentially will happen with this structure? What could it form?
Can form a nice double bottom or a
Yes.
complete double bottom.
Yes, okay? More often than not, if it wants to push up, it will come back to a strong level, okay? And this is where you start to identify this happening before it happens. You will find this a lot as well with these patterns. We don't talk about them much here, okay? But what is this pattern?
Head and shoulders.
Head and shoulders.
Very good. Now, price, this happens a lot, and this is probably your most successful trading pattern in Forex, okay? But the reason why I don't teach it is because it's very hard to identify, and you can obviously misconstrue it a lot. But this is very, very, very powerful as well, okay? But what you have to identify here, guys, okay, is price. If it's up here and failing to break structure highs, then of course, price may not have enough liquidity to pull back to. So now you can start to identify this as rejection area. The way I would think is price now needs to come back for a double bottom before it pushes up. So I can now look for sells in this area.
Oh,
Does this make sense?
yes.
Yeah. Now, if price doesn't hold this level, do I care? No. But what I do know is that more often than not, it will have to come back to a level for a double top or a double bottom. If it doesn't hold at this level, then I don't care, because all I wait for is for price to break this level and confirm to me. If price does find structure level, then I can look for a buying opportunity, because I now know this is a double bottom. Okay. But again, you'll probably have to watch this a couple of times and ask me a few questions. But if you don't believe me, as I said here, check it yourself. Look at the charts. Don't look at your charts as double tops, double bottoms, trendline breakouts. Look at it as market structure and how it's moving, okay? Final note to you guys, okay, on this is the only way you're going to really master this is to practice, practice, practice. If you guys are waking up in the morning at 8 o'clock and drawing your charts and then rushing to take a trade at 8:30 before you go into work, then you're never going to progress, okay? If it means you have to go and sit on the toilet for 20 minutes and look at your phone just to get some peace, then do that. It's very important to continuously look at your charts as often as you can, okay? The reason why is because our brains as human beings, yeah, and I'm not a doctor, but I do know this as fact, we work very well on with music, okay, and patterns, yeah? And that's how our brain really functions for us. And the best way to learn is through music and through patterns, okay? Hence the reason why young ones listen to nursery rhymes, and of course, as drivers, we see different shapes on the road and of course on the signs. It's how our brains work, okay? You really need to learn to apply yourself. Now, applying yourself means doing things correctly. There is no point spending 3 hours on the charts on a simulation session if you're not gonna do it properly, okay? Really apply yourself. Practice, okay? In the morning, do your charts, take a screenshot. Everybody, I'd love everybody here to have a journal. If you can do that, I mean, I don't do it every day, but 2019, I'll be doing it every single day. It's not hard to journal your charts, pop them in a PDF file or in a folder or whatever it is. And you know what? When you have a minute, you can go over those as well, because that will help, obviously, your progress. Study your charts, I said it. Back test. I recommend paper back testing, and I'll show you guys how to do it in another video. Try and do it every day if you can, even if it's for 10 to 15 minutes, all right? It really does add up. And of course, you know, live and breathe your dreams. If it really means that much to you, then you're going to do it, okay? Now, what I'll do for you guys, I'm going to stop the